So Draper Associates is a early stage seed fund. It's Tim Draper's core investment vehicle that he started 30 years ago. And our investment strategy has been investing in companies early at the seed stage and kind of grow with the portfolio companies. In the last 30 years, we actually have seeded more than 30 unicorn companies. So on average, we would actually seed about at least one company that will eventually become a unicorn. In our investment thesis, and also so the fund size in terms of AUM, asset under management, we have north of $1 billion. But the current fund is about $225 million we're investing from, which we raised earlier this year in 2021. So lots of dry powder to deploy into young companies. The investment strategy, we basically partner up with our early stage founders, and if they continue to perform, we like to continue investing in the company. And towards the later stage of the company's financing, we often would write even larger checks beyond our fund size. We would bring in our limited partners to co-invest with us in our winners, right? So you could kind of think of us as your shipper to take a founder from seed stage, from the beginning to venture rounds. And when they get bigger, right before IPO or growth round, we will then bring in even larger capital alongside of our core fund. We are the first check when we are early in the process, but just like everything in life, sometimes we're late to the party. So we don't penalize ourselves when we're late to the party. If it's a good company that we want to invest, we could follow somebody else's lead, no problem. We love working with other VCs or angels. We don't have very sharp elbows. If it's a good company, there's not a lot of allocation left, we go in to what we can take. Obviously, it has to be worth our time, but generally we're very flexible. But we generally prefer the lead because we like to play an active role in the company's development early on. So if we're early enough in the deal, we do our diligence, and we typically turn around our decision in less than a month, from handshake to wiring in 1 month. We move fast. We typically write a $1 to $2 million check to lead a C round. We issue term sheets. Our term sheets are standard MVCA, so that's why we can do things very quickly. We prefer to do, we have a preference for preferred equity when we do our deals. We have a good law firm that we use to keep because of our volume, we keep the legal costs down. So oftentimes for us, it's very cheap to the company to do a preferred stock financing. So we don't really need to do saves or a convertible note. We could go straight to preferred equity. And in terms of industry that I focus on, we're all generalists. We're generalists. We look at everything. But after 20 years in the business, these days, as of 2021, I'm focusing mainly on two industries. That's financial services or Fintech and healthcare. While I look at everything, those two industries I find most fascinating and have a lot of low-hanging fruit. And the reason is this. When I first started the industry in tech in the mid-90s, intranet was introduced. I was an engineer then. Internet is a singular technology that changed many different industries over time in the last 25 years. And if you think about the industries that internet has transformed, first it was communication, and then it's retail, and then it's entertainment, and then it's enterprise productivity, and then it's industrial. Most recently, about 7 years ago, financial services then got disrupted, right? In fact, we first started investing in Fintech about 7 or 8 years ago when we seeded Robinhood, we seeded Carta, we seeded Coinbase. So that was the first time in our firm we put concerted effort into the so-called Fintech. There was no Fintech 8 years ago. There were just these interesting investments that happened to have a financial services angle. We didn't realize we have created this Fintech sector 8 years ago when we seeded these companies. But looking back, hindsight is always 2020. We realize what happened. In fact, to be able to produce one unicorn a year, we often think about the sectors we go in, and we say, all right, this sector underweight, was the unicorns are underrepresented in this sector. We need to invest in this sector and create more disruptive companies. So we think if you look at these industries that have been transformed, right? And again, that's communication, retail, entertainment, enterprise productivity, industrial, and then recently financial services. We're kind of halfway done, in my opinion. So we're not completely done yet. We're halfway done. Halfway done. What else is left? I would say education. I would say healthcare. I would say government services. And you can see the order in which I cited these industries. It's a function of how regulated they are. The more regulated they are, it takes longer for any pure technology to penetrate. So we believe fintech is halfway done. Financial healthcare is just getting started. Education is just getting started. Government services is just getting started. We also believe 2021 is an amazing time to start business in these sectors because COVID actually, while it's a terrible, terrible thing that happened to humanity, it also advances humanity in different ways. COVID, in a way, show people around the world, that's consumers, enterprise, government leaders, the possibility of technology. We never knew we could work from home so much. We never knew students can learn so well remotely. We never knew a vaccine used to take 4 or 5 years could take less than 1 year. We never knew we could use DNA sequencing, the Chinese scientists, to share the virus genetic code quickly with their peers around the world without sending test tubes and petri dish to their peers. We never knew it would take government so much time to send out free money. We also learned, for instance, some governments around the world are solving this problem of giving out free money by offering and issuing the digital currency, central bank-backed digital currency. Imagine, what is the fastest way to give out free money is if you already have a digital wallet, and I'll just push money directly into your wallet, right? That's an example of government services getting digitized. And you say, well, that's not internet. Well, I tell you what's interesting is that this singular technology, internet, has morphed into mobile, wireless, share economy, SaaS software, AI, big data, blockchain. These are all just based on the proliferation of internet. One technology, right? One technology. So in other words, in investing, I'm always looking for, hey, is there a fundamental barrier to entry? Is there a science risk? Everything I talked about has zero science risk. It's pure execution and commercialization. So that's perfect for venture because, I'm not a scientist. I'm an engineer, not a scientist. So I cannot judge whether something works or not. If I have to judge something works or not, then I'm not doing my job, right? I need somebody else to de-risk the science. I focus on commercialization. I focus on execution. I focus on market risk. Right? Those things are easy for me to assess and manage.